One of the largest banks in the world, Standard Chartered, makes a bold prediction about Aave. Aave apparently can hit $3,500. Now that's by the year 2030. What we see over here, that's the Aave price in US dollars. It tends to move in a range. And the average price over the very long term, that's this dotted line over here. It's $166, which would mean the price would double to just get back to its equilibrium. There is more news. There's not just a prediction by Standard Chartered, there's also Kraken that's interested in buying Aave. So is this potentially an opportunity? Let's have a look at the on-chain data. Let's see who's buying and selling here. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and I did this mainly through active trading of altcoins. My track record is on the website down below. In the last 2 years, I started to publish my trades in real time, and we achieved 47% annualized. We are currently, with the open positions, at a new all-time high. Every single trade is logged in real time, and it's also shared publicly on the website. I don't think that many people are willing to be that transparent with their trading. Now, regarding the takeover, the founder of Aave has already made a statement. He's basically denying that Aave is for sale, especially for that low ball offer. By the way, if you are on X, formerly known as Twitter, then feel free to also follow this channel over here. I publish content regularly. Make sure that you follow the right account though. So that's at BitcoinStrat. Please do not follow a fake account. At BitcoinStrat is the only real account on X. Now, relative to the rest of the altcoin market, Aave was struggling. So this is the Aave price divided by the altcoin market cap. Even though Aave is the leading borrowing and lending platform, the token actually underperformed the rest of the altcoin market by 50% over the years. But again, getting back to the long-term equilibrium would mean positive performance, roughly 70% outperformance. The reason for the initial struggle was tokenomics, as in the supply of Aave was expanding over time. And that's actually the reason why most altcoins suffer initially. The demand simply doesn't grow as quickly as the supply. But the tokenomics have improved. Aave is now buying back its token, and that reduces the net market float. Thus, we will see less circulating Aave tokens over time. This is one of the few buyback programs that's actually legitimate. For the pump token, we just had fake buybacks. Same for the Aster protocol. So the protocol was just moving locked tokens from one wallet to the next. Here we actually see a reduction of circulating supply. This should support the Aave price. Now, unfortunately, the protocol's usage is not growing over time. Every now and then we do see crises. Every now and then we have small little hacks or exploits. The usage topped in October of last year at 45 billion and since then shrunk to 13 million. The amount of loans that are being made, that fell from 30 billion down to 10. Now there are several reasons for that decline. One of them definitely is also crypto prices in general going down. But still, even measured in Ethereum, for example, the long-term growth trend has stopped in February of this year. Here are the generated protocol fees over time, and even measured in Ethereum, that's not necessarily growing. So very long term, I think Aave looks fine, as in the token will shrink its supply and the usage doesn't shrink as quickly. However, there's always a risk, right? With artificial intelligence progressing further and further, the risk of a decentralized finance protocol getting hacked also goes up over time. In the short term, the token price of Aave moves just like any other cryptocurrency. It tends to move with attention. What we see here in the bar chart, that's the number of social engagements. So that can be tweets, that can be YouTube comments, that can be many things. What we see in green, that's the price. So we can clearly see that the more social engagement there is, the more people discuss Aave, the higher the price goes. And once the attention moves away, the price goes down. But recently we've got this spike in attention, and the price has not yet reflected that increase in the number of eyeballs. Now the Aave token is available on many chains because the protocol itself also operates across different chains. Most of the liquidity though is on the Ethereum chain. So let's have a look how many retail investors own Aave, how many whale and big investors own Aave. If we count all holders on chain, we are close to 200,000. Now here is the segregation and the development over time. On the left side, to be counted in that chart, a wallet has to hold at least 10 Aave tokens. In the middle, it's 100. On the right, it's 1000. So we go at 10x with each chart, 1000 Aave tokens. That's a bit over $80,000 worth of Aave. So a sizable position. We can see that the retail investors are not necessarily accumulating that much anymore over the last 3 years. For medium-sized retail, that's over the last 2 years. And the whales, the big guys, they tend to be buying the most consistently. They are close to an all-time high. And actually, I like this split up. I like when the whales accumulate a token because this is a sign that the smart money is buying in. Fundamentally, I hold the position that crypto is both a game of luck, but also of skill. It's a combination of both. And so the people that have more capital, they tend to, on average, also have more skill because long-term the capital concentrates towards the people that know more. And so if the heavyweights, if the whales, they are the buyers of a token, that's good. We want to have the smart money accumulating the investment. Very short term, prices tend to move with leverage. So on Binance, for example, we had 44 million worth of trading volume on the spot market. We can ignore Coin Up because here the volume is not very reliable. We've got 44 on Binance. Now on the perpetual futures, we have more. We've got 338 million. So very short term, it's the leverage, it's the short term bets on the derivatives market that drive the price. Now, most people are actually bullish on Aave long term, as in the longs pay the shorts. It costs money to get additional exposure to the asset. The people that bet on rising prices pay the people that take the counter position, that bet on falling prices. And again, we can clearly see how attention directly translates into price movements. Here we've got the trading volume on the perpetual futures. And when this is going up, then the price goes up. When this is going down, the price goes down. And we are still comparatively low on the trading volume. Now over here, we've got the open interest, as in how many bets are currently made on the Aave price. This is basically a measure of how much short-term leverage there currently is. And again, there's correlation. Currently, we are not at historical heights, but we are also not super low. The open interest is at roughly 300 million. The peak was at 800. If there was to be more short-term speculation on the Aave price, then of course that leverage translates into spot appreciation as well, simply because arbitrage bots play the delta between spot and the perpetual futures market. Now, since the price of Aave moves in trends, it probably makes sense to time the market, to try to buy when we are low, to try to sell when we are high. Now, this is more an art of a science, unless we crunch the numbers. I like to run backtests. I like to run simulations of buying and selling the asset to figure out the best trading rules. The trading rules that historically work best to time an asset. And I've done the same for Aave. And what we see here at this chart, that's the result of 40,000 backtests, 40,000 simulations of buying and selling Aave. We are trying to find the best golden cross and the best death cross. What moving average combination worked the best historically for the Aave price? And that's answered by this chart. So we've got the slow moving average at the bottom, we've got the fast moving average here on the left, and the best combination that's shown over here. What is that combination? It's the 12-day simple moving average with the 40-day simple moving average. And the 12-day simple moving average crosses above the 40-day SMA, then we've got a golden cross, then we've got a bullish signal. When the fast moving average goes below the slow moving average, we've got the death cross. Now here's how well that strategy worked over time. Pretty much every single year we tended to make money following that trading rule. It's a much more consistent performance compared to just buying and holding the asset directly. And so this is where we are right now. The 12-day simple moving average is still below the 40-day simple moving average, but a golden cross might happen extremely soon. According to the backtest, we would have bet on falling prices already since the 25th of January. And yes, there are some bad signals every now and then. We don't necessarily, with every golden cross, turn around. But what matters is the long term. What matters that in general, this approach worked very, very well. And so it's probably best to just wait a few more days until we get that golden cross and then enter. Then of course also revert the position in case we go back down again, or if the attention suddenly dies down. We don't have a crystal ball here. We are just crunching the numbers. We are just using the approach that historically worked very well. And I like those kind of approaches. This is how I trade the altcoin market. And that's why the altcoin trading history looks the way it does. This is not luck. This is trading based on statistics. So for example, over here, we can just click on those dates. We shorted the Terra Luna token. when we got a def cross. So that was over here. We just backtested what are the best moving averages for that particular asset. So here was the 6-day and the 10-day. We got our def cross, we opened our short position, and then subsequently we closed the position when we got the golden cross. So I like those kind of trades. We don't always make money with every single trade, but long term, 47% per annum in a market where everybody else has lost their shirt, I think it's very respectable, especially given that the drawdowns are very manageable. And so you can simply just wait for the golden cross in Aave and buy it then. If you want to get another trade that I personally currently hold, it's also one of the open trades available to all the premium members. If you want to get such a trade for free, then there is the link down below. Simply enter your email address and you won't just get the trade, you will also get a tutorial video on how to execute that trade. Because there's actually some nuance to this, as in very often we open relative valuation trades. We go short one asset and go long another asset. We play the delta. And of course we do this based on the back tests. But everything is explained in that email. It is free, no credit card, no payment, nothing is required. The link is down below. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.